Welcome back to Investing Talk Podcast. Right, let's get straight into it. We are looking at what might be, well, one of the biggest near-term catalysts for the whole materials space. That's the upcoming third quarter 2025 earnings report for Freeport-McMoRan.
Oh, absolutely. This one's huge. If you're tracking copper or even the broader economy of this report, it's going to set the tone for, I'd say, the next 6 months easily. So our goal here is pretty clear. We want to cut through, all the noise. We've looked at the key operational stuff happening lately, pulled together what analysts are actually expecting for the headline numbers, and maybe most importantly, we've pinpointed those, let's say, 3 critical operating metrics that are really going to drive how the stock reacts when that news drops.
Exactly. We want you, the listener, to finish this discussion knowing precisely where to look in that report, where the potential pitfalls are, but also where the upside surprises might come from. And hey, if you find this kind of analysis useful, please do hit subscribe, like the discussion, leave a comment. It really helps us out. And actually, if there's a specific company you'd like us to maybe tackle next time, drop it in the comments below. We do look at those. Okay, first things first, the timing. You need to get this on your calendar. It's Thursday, October 23, 2025. The actual earnings release, that's scheduled to come out before the market opens that morning.
Right. The press release numbers are one thing, but the real meat, the guidance, the color commentary on how things are running, that comes later. That's during the conference call, and it kicks off at 10 a.m. Eastern Time. That's ET. If you're worried about costs or, the whole Indonesia situation, those are probably the 2 biggest variables. You really want to listen to management's tone on that call. Get a feel for it directly.
Okay, let's set the scene then. Looking back over the past 3 months, Q3, what was happening? The narrative seems, pretty steady. Our sources suggest operations were kind of business as usual through August and September, just focusing on production schedules, trying to find those little efficiency gains across their huge global portfolio of assets.
Yeah, operational consistency is key in mining. Unexpected shutdowns can just absolutely wreck a quarter. But stability isn't only about digging stuff out of the ground, right? It's also about shareholder returns. So back in September 2025, the board made a point of declaring that quarterly cash dividend, $30.15 per share. Keeping that consistent payout policy, that's management signaling, hey, we think we can handle these inflationary pressures and still generate the cash.
And inevitably, when you talk about cash flow stability, especially for Freeport-McMoRan, it all comes back to Indonesia, doesn't it? They put out an operational update in October specifically about PT Freeport Indonesia. That's their crown jewel asset. And it focused heavily on, production optimization, but also those ongoing regulatory things in the region.
Oh, the Indonesia story is just central to these Q3 results.
Yeah.
You have to remember, earlier in the year, they had those regulatory issues. It slowed down their concentrate exports. They finally got those shipments moving again back in March 2025 after getting the green light. So Q3, that's the first full quarter where those resumed exports should theoretically be running near full tilt. We're not just looking for decent volumes. We need smooth, consistent volumes coming out of Indonesia this quarter.
Right. Okay. So that sets up a pretty high bar then. If volumes are supposed to be smooth, why did the stock itself seem a bit stuck? We saw, like you said, fairly muted action in mid-October. It traded in a pretty narrow range. I think it dipped slightly, maybe $42.78 down to $41.70 over a few days. It kind of feels like the market was just waiting, holding its breath maybe, rather than really betting on a big volume surge.
I think that's exactly it. The stock price action probably reflects that tension. Between strong copper prices, which are obviously good for them, and the big unknowns, those unknowns being cost inflation and the delivery risk from that massive Indonesian operation. It suggests the market isn't maybe totally convinced yet that the volumes and the costs are perfectly aligned for a blowout quarter.
Okay, that tees up the forecast section perfectly. What are the actual numbers? What's the consensus expectation? What's the bar management needs to clear here?
Right, the benchmark. That's set by the analyst consensus, and it's pretty demanding. For Q3 2025, this REIT is looking for revenue of $6.23 billion. Now, what's interesting there is that it's expected to be basically flat compared to Q2, but it's still up about 3% compared to last year, Q3 2024. That flat sequential number, to me, suggests analysts are factoring in, strong Q3 seasonality, but maybe offset by some commodity price whittles.
Okay, so call it $6.23 billion on the top line. What about the bottom line? Earnings per share.
Profitability-wise, the non-GAAP EPS consensus is sitting at $0.62. That's the official number everyone will quote. And this is where it gets interesting, especially if you're actively trading this. The Q3 EPS whisper number is higher. It's 0.65 cents. That whisper suggests that the folks actually putting money online, the traders, they're hoping for or maybe expecting a slight beat over that analyst average. So if Freeport only hit 62 cents, the reaction might be kind of muted.
Yeah.
But hitting $0.65, that would validate that slightly more bullish market lean.
And how's their recent track record? Do they usually hit these numbers? Looking back, say, the last 4 quarters, they've generally met or maybe slightly beaten revenue and EPS estimates. There was that one little miss, I think, back in Q1 of this year, 2025. Does that history give us some confidence?
It gives us a decent baseline, yeah.
Yeah.
And that Q1 2025 guidance call is important context, too. Remember, back then, management said they didn't expect any material change to their full year 2025 guidance. Their previous sales targets for the year included copper around 850 million pounds for Q1 specifically, and gold at about 225,000 ounces, kind of as an annual run rate. Hitting those full-year numbers absolutely requires a strong volume performance in Q3.
And connecting this back to just the sort of rhythm of the mining cycle, why is Q3 in particular usually so important for actual physical copper delivery?
Yeah, historically, Q3 tends to be the peak period for copper shipments. That's true across the industry, but especially for Freeport-McMoRan. It's down to logistics, operational schedules, things like that. So if they stumble on volume this quarter, it immediately raises questions about hitting their numbers for the rest of the year. It doesn't matter how high copper prices are if they can't ship the stuff.
Okay, we've got the big picture. Let's dive into the specifics within the report itself, the metrics that really tell the story. Obviously, the biggest driver for revenue is the price they get for their copper. That copper average selling price, ASP, they actually realize, how critical is that specific number?
Oh, it's absolutely paramount. That dictates the pure profit leverage. And what's kind of interesting with Freeport is they often realize an ASP that's higher than the standard benchmark, the LME price, that's usually due to their sales mix specific contracts they have.
Yeah.
Just for context, back in Q1 2025, their realized copper ASP was $4.40 per pound. And that was noticeably higher than the LME average at the time, which was around $4.24 per pound.
Right, $4.40 a pound. That's our Q1 benchmark then.
Yeah.
And you mentioned copper spot prices have stayed above $4 recently as of October. So really anything they realize above that $4.40 mark from Q1 is potentially significant upside leverage.
Exactly. Big leverage potential. But now I have to talk about the flip side. The biggest operational risk, which you kind of hinted at earlier, cost control. If ASP is the revenue engine, what's the critical metric on the expense side we need to watch?
That has to be the unit net cash cost. And this is where, I see that potential tension building. You mentioned operational consistency, but we already know costs were creeping up back in Q1.
Precisely. It raises that key question for anyone investing. How stable are things really when inflation is clearly biting? Unit net cash cost, that's basically their operating cost for each pound of copper they produce. But after they subtract credits they get from selling byproducts like gold and molybdenum. And the risk here is pretty stark. In Q1, that unit net cash cost was already tracking about 5% higher than management's own guidance of $2.05 per pound for the year. If that cost creep continued or even accelerated in Q3, well, it could just eat up all the benefit from those higher copper prices.
So cost inflation is the real ghost at the feast here. We know Q1's gross margin was 28%, operating margin was 22%. Investors are going to be laser focused on whether that combination, peak shipments plus hopefully high realized copper prices, allowed the gross margin to push higher than 28%. Because like you said, if they report, say, $4.50 a pound realized copper, but the unit cost jumps another 5%, poof, that margin expansion just vanishes.
And that ties directly back into those byproduct credits we mentioned, specifically gold. Copper obviously dominates the revenue, but gold sales, they act almost like a financial shock absorber. They directly reduce that unit net cash cost figure.
Okay, tell us more about gold then, because we know Q1 2025 gold production was actually 100,000 ounces below their plan, even while copper volumes were okay. Why did that shortfall matter so much?
Well, that 100,000 ounce miss, it directly makes copper production look more expensive because you have fewer gold credits to offset the costs. The ongoing story there is the ramp-up of their newish precious metals refinery over at PT Freeport, Indonesia. If they're finally getting that refinery fully humming in Q3, we should see gold volumes stabilize or maybe even improve. A decent rebound in gold production in Q3. That's almost like a stealth cost control lever. It could significantly help lift that overall gross margin, even if the basic digging and processing costs are still stubbornly high.
Right, got it. Okay, let's shift gears slightly. Technical setup, market positioning. What's the options market telling us? Is it expecting fireworks on Thursday?
Oh, it definitely is. The market's signaling really high implied volatility. We're seeing an IV rank of 82. The front week implied vol of it is sitting around 52%. So what that IV rank of 82 means for you, the listener, is that option traders basically see this earnings event as one of the most potentially volatile catalysts they've tracked for this stock all year. They're bracing for a big swing.
And can we put a number on that? How big a move is the market actually pricing in right after the announcement?
Yeah, we can estimate that from the options pricing. Right now, the market's implied move for the stock immediately following earnings is about plus or minus $2.55. In percentage terms, that translates to roughly 5.4% either way. So if the stock moves less than that, it's a bit of a non-event volatility-wise. More than that, and it's a bigger than expected reaction.
Okay, so a 5.4% expected move. Looking beyond just Thursday's reaction, what comes next? What are the other potential drivers, the catalysts that could keep this stock moving or maybe stall it through the end of 2025?
Well, there are some important, almost structural market events coming up. In November 2025, you've got the Russell Index Rebalancing Review. These index reviews force huge ETFs to rebalance their holdings. That often creates sort of artificial buy-or-sell pressure, specific trading windows. Then, come December 2025, you get the year-end institutional portfolio adjustments. That's when fund managers are locking in their performance for the year, window dressing sometimes. It can lead to pretty substantial moves in the final weeks of the quarter.
Okay, those are more technical factors. What about the bigger picture, the more speculative stuff that really underpins the longer-term bull case for a stock like Freeport?
Right, the thematic drivers. Well, number one is obvious. Sustained strength in copper prices. The whole long-term story rests on global electrification. EV demand, upgrading power grids, general infrastructure spending. If copper prices stay strong or break higher, this stock tends to follow. Second, and always critical, is politics. You have to keep monitoring potential changes to Indonesian regulatory developments, especially around their export policies. Any surprise policy shift there could throw production forecasts completely off track, like instantly.
And there's always the M&A chatter in the mining sector, isn't there?
Always. M&A activity speculation just never really goes away because Freeport's assets are considered so high quality. So the company gets viewed in two ways. Either as a potential buyer, looking to snap up smaller copper players, or given the sheer scale and quality of its copper reserves, maybe as a prime takeover target itself for one of the truly global giants. And finally, keep an ear to the ground for rumors about major capital investments. Big expansion projects. If management suddenly signals they're ready to greenlight massive new spending to boost production capacity, that signals a really aggressive long-term growth outlook.
Okay, let's try and pull all of this together. We've talked about the $6.23 billion revenue target, the 0.62 EPS consensus versus the $1.65 whisper, that tension between Indonesian volume and unit cost control. How do the potential outcomes stack up for Thursday's report based on everything we've discussed?
Yeah, we can kind of sketch out three main scenarios based on our analysis. The most probable outcome, we think, is the base case. We'd put maybe a 60% probability on this. This assumes operations were generally stable, those Indonesian exports held up okay, and cost inflation was there, sure, but maybe manageable.
And what would the numbers look like in that base case scenario?
Revenue probably comes in somewhere between, say, $6.20 billion and $6.30 billion, right around consensus. EPS, maybe between 0.54 and 62.80 cents. So that would actually be a slight miss on the official consensus of Dividend and 62 cents, but maybe a modest beat on the lowest end of expectations, closer to the whisper perhaps being a bit too high. The stock reaction probably contain maybe that plus or minus 3% to 5% range. It's a solid report, decent volume, but costs keep a lid on things.
Okay, base case 60%. What about the upside, the bullish case? You put a 30% probability on that. What needs to happen for that?
Yeah, for the bullish case, you really need a couple of things to go right, probably together. You need those key performance indicators, the KPIs, to beat expectations. That can happen through a surprisingly high realized copper price, maybe well north of that $4.40 Q1 level. Or, and this is critical, really strong, smooth Indonesian shipments combined with a successful gold ramp-up that really juices the byproduct credits and pushes that gross margin comfortably above the 28% we saw in Q1. If they manage that kind of margin expansion, yeah, then you could see a stock reaction of plus 5% to maybe even 10%. That would really confirm the market's underlying bullish health.
And the downside, the bearish case, only a 10% probability, but what triggers that kind of negative reaction?
This scenario unfolds if there are unexpected problems. Maybe significant operational delays hit those Indonesian volumes. Or perhaps more likely, if those unit net cash costs come in really hot, say 8% or even 10% above the guidance level, that would really squeeze the operating margin, maybe push it down below 22%. If that happens, yeah, the stock likely reacts badly. A drop of 5% to 10% wouldn't be surprising at all.
Okay, so we have high implied volatility suggesting a 5.4% move, but your highest probability scenario, the base case, suggests maybe a slightly smaller move. What's the overall leaning then heading into Thursday? Bullish, bearish, neutral?
I'd say our overall leaning is probably neutral to maybe moderately bullish. The macro backdrop with strong copper prices is definitely supportive, and the fact that those earlier Indonesian export issues seem resolved should prevent a major volume disaster. But we have to stress the caution that persistent global cost inflation is real, and macro risks like maybe softer demand growth out of China, they could change the story fast, especially if those unit costs come in higher than expected. The tension between price and cost is absolutely the key dynamic here.
That's a fantastic breakdown. So just to recap for everyone listening, we've given you the key data points to track: that consensus 62 EPS target, the crucial $4.40 per pound copper ASP from Q1 as a benchmark, and that market implied 5.4% price move.
And maybe just one final thought for you to chew on as you watch this unfold on Thursday. Given how sensitive this stock is to copper prices and all that M&A speculation floating around, driven fundamentally by the global need for copper for electrification, how might a sustained move in the stock price, maybe above that $50 resistance level, if supported by a strong Q3 report, how might that force management to rethink their long-term capital allocation? Do they stick with just maintaining the dividend? Or do they get aggressive and commit huge new capital to expansion projects? Or maybe prioritize paying down debt? That decision, spurred potentially by this report, could really shape the stock's trajectory for years to come.
Definitely something to think about as you watch the reaction. Thank you for joining us for this analysis today. We really appreciate you tuning in, and we'll be back with another informative discussion very soon.